money itself and commodities are now essentially become weapons of war, become part of the, how do we put it? Yeah, just really, they just become weapons themselves.
Yeah, for the commodity part, that's always been a key aspect of war. I mean, during World War II, secure over oil fields was a key part of it. That's why there were a significant amount of battles, even in the European theater outside of Europe. A lot of it was to secure certain energy supplies, and so that's not new. It is new, relatively new, to have this level of financial warfare, right? So, for example, freezing reserves, and this kind of begs the question of how much Putin anticipated, because they did, make themselves sanction resistant by focusing on gold and de-dollarizing as much as possible. But they did have a very big focus on euro-denominated assets. And maybe he didn't expect that they would freeze the euro-denominated assets. It's hard to say for sure. But essentially, several $100 billion of Russian reserves have been frozen by the West, by these sanctions. And that is equal to several years worth of military spending for Russia. I mean, it's a huge percentage of their GDP, a huge multiple of their annual military spend. And so it's already been an extraordinarily expensive war for Russia to fight, let alone the devaluation of the ruble, the decimation of Russian savings, the stock, their stock market being imploded. Then there's also just the reserves themselves being frozen. And that kind of shows this level of financial warfare that's happening. And their counterpoint is, hey, we control like a significant minority of commodities, both for energy and also even for green tech. Nickel, for example, is absolutely key for battery technologies as we currently know it. And so it's kind of this war between what's going to happen first. Is Russia's financial crisis going to kick in faster than Europe and the rest of the world's commodity crisis? And we're kind of in this race between, who can harm each other the fastest, while they're not having a kinetic war between each other. The kinetic war is focused in Ukraine, but these greater powers are focusing on this financial and commodity war in the background of the actual physical warfare.
And your observation of this race, who do you think's struggling more? Because we know when sanctions are put in place that it tends to harm the people before it harms the leaders, and it feels to me like historically sanctions don't usually work.
So I think they're both, unfortunately, being very, successful in terms of hurting the populations. I mean, Europe's struggling with the energy crisis. Russians are struggling with the financial crisis. From my reading of it, I think Russia is being hit harder, faster. But it remains to be seen if that will be the case longer term. To the extent that sanctions help, I mean, it's challenging because polls generally showed, including Western polls, showed that actually a decent number of Russians were in favor of this type of conflict, and that could diminish over time because of this, right? Putin could lose political support, both of oligarchs and of the population, but it's unclear if that'll work or not. It could have the opposite effect. It could kind of polarize them around Russia and away from the rest of the world. I don't really have the expertise to determine how successful those will be. It's just an observation about what's happening, and so. It's not even just the sanctions. It's like all these self-sanctions as well. So a lot of companies are just saying, we're not going to sell our products into Russia. And that includes a lot of the internet companies, the the technology providers, things like that. And so in addition to bifurcated supply chains, bifurcated commodity markets, that could contribute to the bifurcation of the internet, kind of like how China and the Western world kind of have their own internets. Russia could shift more towards the Chinese internet side. And so you almost have two internets around the world.
So what kind of impact are we aware of that this is having on people within Russia? What are you seeing?
Well, one is that their savings have been just severely hurt. The Russian stock market's been closed and totally impaired. It's just completely devastated. And from studies I've seen, by example, I think Meb Faber of Cambria Investments cited this. The Russians have like 90, among the Russians that have stocks, which is not all of them, and whatever percentage they have in stocks, 95% of that is in Russian stocks, right? So they have very little global diversification, and Russian stocks were decimated. So a lot of people just had their real estate damaged. Their savings damaged. Then they had their stocks crushed, and then real estate remains kind of an open question, right? So that gets marked to market a lot slower. It's obviously a decent inflation hedge overall, but only if people want to buy those properties. If people try to, if people leave Russia where they can, that's obviously very detrimental to their real estate values. And so pretty much across the board, among multiple asset classes, they're being hurt very poorly. Now, the ones that are doing better are maybe the select few that do have a decent amount of international exposure to other assets. Could be dollars, could be U.S. stocks, could be gold, could be Bitcoin, right? So Russians that do have those foreign assets are the ones that are holding up way better than their peers. And then we've also seen in Ukraine, for example, ATMs running out of cash, people trying to flee with money that they can get. And both Ukraine and Russia are pretty high on the crypto adoption index that the Chain Analysis kind of puts together. So I believe Ukraine was number 4, Russia is something like number 19, and so both of those populations do have rather high amounts of Bitcoin and crypto exposure. I don't know specifically the breakdown because I think the crypto index just kind of looks at multiple assets, but obviously it's generally Bitcoin focused, and so both of them do have a decent percentage of people that have those assets, and those that had them are more protected.
And in terms of the ruble being hit quite badly, what is the direct impact on that? Is it mainly with regards to bringing in imports that Russia may be perhaps relies on? How much defense can the Russian government put against that? How self-sustainable can they be?
Yeah, so before the war, the ruble is already kind of weak. And it's interesting because the ruble, in some ways, before their reserves were frozen, if you just look at the fundamentals, the ruble was actually pretty strong, right? So it's the currency that is actually the most gold-backed of any major currency, meaning that their gold reserves as a percentage of their money supply were among the highest in the world, arguably the single highest, especially out of major currencies. And then they had very large reserves, but that was obviously a lot of those reserves were frozen, so their effective reserves as a percentage of money supply just went down significantly. And of course, the sanctions can decimate their economy, which makes nobody want to own the ruble. And so overall, that should be a very severe effect. So prior to the war, there's kind of a mixed bag. So on one hand, their import power was not very strong, but it also made their export power very good. And so, for example, one of the reasons that Russia is such a good wheat exporter is that, in addition to just the good geography for it, they have fairly low labor costs, right? When you have an undervalued currency, if you kind of run through what Russia's currency should have been valued at versus what it was valued at, it was essentially undervalued. And so it's not good for their importing power, but it does give them a lot of export competitiveness. And so that was all pre-war. Now, with the war going on, they get most of the bad sides of it. So they have a lot of trouble importing things, both from the strength of the currency and the fact that many, many companies are just saying, we're going to close our Russian operations or we're not going to sell to Russia. And so their ability to get imports has been greatly impaired, except that they can still get their imports from China. And so it kind of forces them to shift east in terms of their import dynamics. Their export competitiveness would get better if it wasn't for the fact that, again, a lot of places are saying we don't want to buy Russian products. But of course, it's complicated because their commodities are required around the world. And so, many countries were sanctioning where they could, but they couldn't sanction their commodities. But then in many cases, Russia's then starting to do that for them and say, well, we're going to put export restrictions on some of our commodities and kind of make lists of who we don't want to sell our commodities to. And so that's where you get that kind of counterpoint. And then it becomes a race to see, does Russia go insolvent before Europe goes like commodity insolvent, for example. And so that's this background war we're having in addition to the kinetic war.
And so there is a chance of the country going insolvent. How does a country go insolvent? What is the actual impact on that? Would that be a complete collapse of the country, perhaps therefore a collapse of the government?
In the extreme case, yeah. I mean, there's a spectrum, right? So on the very extreme case, you have like a Venezuela situation, right? A less extreme case, you have what's happening in Argentina and Turkey and currently Russia now. And so going into this, so Russia looked very different than Argentina and Turkey because Argentina and Turkey had a lot of foreign debt and pretty low reserves, right? So they were prone to financial crisis. And that's part of the reason we've been seeing such massive inflation out of them and them having an inability to contain their currency. Russia was the opposite, where they were built like a fortress position. I even had a meme out there saying that, they had like trade surplus, low debt, high reserves. Putin was fairly popular in polls, both domestic polls and Western polls. And then they did this, and just across the board, all those things are getting damaged, right? So basically, if they have a financial crisis, depending on how bad it gets, and at this early stage, it's still hard to say how bad it will get. But at the very least, they're already kind of now looking like Turkey or Argentina, with obviously very bad inflation, disastrously high interest rates, just totally seized up economy. And if it gets bad enough, I mean, if the sanctions get bad enough and if they're cut off enough, it could look like Venezuela. You could have that sort of situation. I think a key factor that's going to determine how badly Russia is impacted is to what extent they can rely on China and to what extent they can renegotiate some of their commodities. And so one point that I've made is that countries with GDP per capita less than, like, say, 15,000 are less likely to go along with Western sanctions because they absolutely need the commodities, right? So when you have GDP per capita of like 3,000, you have less flexibility to decide who you're going to buy commodities from. And so if Russia can kind of shift where it sends its commodities to, they're already talking about building pipelines that would, say, redirect some of the European natural gas to China, for example, but those take time. And so if they're able to navigate that, then they could stave off among the worst crises. But it remains to be seen.
I can imagine one of those types of pipelines, though, takes, years to build?
Usually years. I mean, now they have a national incentive to throw everything possible at it. So I would, kind of cut off time from whatever the normal case is. But they built I believe it was called the Power of Siberia. It was a pipeline that does go to Russia to China. And because you can imagine that the amount of land space there, it's one of the longest pipelines around. It was like, well over 1,000 miles. I don't have the data in front of me, but it's a very large pipeline. And that did take years to construct. And so they essentially want to build more of those and also make connections so they can redirect European natural gas to them rather than being separate systems. And that does take time. Similarly, it takes time for Europe to build LNG capacity so that it can become less reliant on Russian gas. And so that's kind of the emergency situation, is that, see, oil is more fungible, right? Because except for very niche situations where kind of a region's cut off from supply chains, for the most part, there's less extreme oil pricing differentials around the world because a barrel of oil can be transported relatively easily. And so you get minor differences of pricing, but not usually huge differences in pricing. Whereas natural gas, because it's harder to transport, naturally has bigger price differentials between locations. But even before the war, we were seeing this between, say, Europe and America, where Europe, at some points had gas that was like 10 times more expensive than America. And that's because you either do pipelines, which is obviously very location specific, or you do LNG, which is rather expensive and has very limited capacity, right? So we can't just like triple our LNG next month, right? So there's hard limits on how much you can do. And so that infrastructure takes time to build as well. And so it's a mess on both sides. And it's one of those things where almost nobody wins from this conflict, it seems.
Okay. Are we hearing any case studies of things which are happening on the ground in Russia, like the impact of this? One of the things I heard about was, for example, they can't now import parts for Boeing, so there's a risk to the airlines, and which was something that I hadn't considered, obviously, but now I've heard about it. It obviously makes total sense. My dad was an aircraft engineer. They're constantly having to check the planes and fix parts of the planes and change parts of the planes. So that's just one example of just a single industry for them that's now at risk if they can't get the parts.
Exactly. Both Boeing and Airbus can restrict their parts, and suppliers can restrict their parts, basically the avionics providers and things like that. And so that can cause issues. We actually saw similar issues for Iran because a lot of there was basically restrictions on parts to maintain their nuclear facilities, their nuclear power, kind of the approach there. And so when you have a very complex system and you get your maintenance parts cut off, that does over time degrade systems, and you can have things go offline. Basically have to shut down power plants or have to shut down part of your fleet because you're unable to maintain it. Now, Russia does have obviously a very strong aerospace industry on its own, so it's maybe less impacted than some countries would be, but it's still obviously impacted by all of those shutoffs, including the aerospace ones.
And what about just like general citizens? Is there any particular pain points we're hearing about with regards to these sanctions or what's been happening?
Well, I think the devastation of the savings was obviously the big one. But yeah, basically we're seeing consumer brands cut off. You're seeing shut down McDonald's. You're seeing Microsoft. I mean, Apple. Like basically all the normal products that you interact with are being one by one elected to not be sent there. And so I think that this, because this has only been a short period of time, I don't study the anecdotal on the ground stuff as much as some other people do. Some of the journalists would be much better people to ask about that than me. I focus more on the financial aspect. But basically, so far it's been a short period of time. But the longer this drags out, obviously, the more those things start to notice, right? So, for example, if you have a laptop already, maybe you're not impacted by the fact that now it's going to be harder to get certain laptops. But if as you go on and you need a new one, well, then it becomes a pretty significant issue. So over time, this should compound as they have less and less access to all these different Western brands, and they're either forced to go without or they're forced to shift east in terms of the supply of goods and services that they use.